Shares of Lucid heading downhill this morning after third quarter vehicle production fell 32% from a year ago and nearly 29% from the last quarter.
GM now following Ford in the sense that they are actually pushing back production of the EV Silverado and also the Sierra.
Toyota, Honda, Tesla, and the others are loving this strike because they know the longer it goes on, the better it is for them.
In the long term, why is it so good news for Tesla? I mean, eventually the workers are going to come back. Eventually, I mean, whether it's a week or even a month, and they're going to start churning out cars again that are going to compete with Teslas. So it feels like, isn't it more of a temporary hiccup than anything more profound here?
All that and more. So let's get to it. Today, Tesla has its Q3 2023 earnings call, and as you can see in the pre-market, Tesla's probably going to have a pretty down day. I'd go so far as to wager that the rest of the week will not be a positive one for Tesla. But I am shocked that Tesla is still sitting at 252.77. For the week, Tesla is currently down 4.5%, and looking at the 3-month chart, Tesla is down almost 13%. Year to date, still over 100% gains. I don't think people appreciate how difficult it is to produce battery electric vehicles profitably. Tesla makes this look so easy. There's a few manufacturers finding out the hard way.
Shares of Lucid heading downhill this morning after third quarter vehicle production fell 32% from a year ago and nearly 29% from the last quarter. The EV maker delivered 1,457 of its Air sedans in Q3. That's compared to 1,404 in the previous quarter. Shares of Lucid are down more than 25% so far this year. You know, Rochelle, when you think about Lucid's story, there are really two key concerns here. The inventory that we just flagged right now. Yes, they delivered more, but at the end of the day, that means they're still accumulating inventory. That's not a good thing for a company like Lucid. But also, when you think about cost right now, we're talking about cars that are upwards of $75,000 to $80,000 at a time where consumers are increasingly sort of tightening their wallets a bit. And you have to wonder what the appetite is for a car like Lucid, a luxury EV in this environment.
Oh, I'll tell you, it's non-existent. Not for what it costs to produce this luxury brand vehicle. Lucid's been around for a while now. And what really grinds my gears is that I don't see them trying to make a next generation platform to increase their total addressable market. If they plan to be the Ferrari of battery electric vehicles, that's fine. They're just not going to achieve that goal.
It's true. I mean, when you think of other companies, of course, namely Tesla is the one that always comes to mind when we think of EVs. But when you think of their delivery targets versus the cost that you see for a vehicle like a Lucid, I mean, it's concerning. And when they report earnings, I believe it's November 7th, these are going to be some of the questions that people have. Because the way that they actually have their supply line, they do a lot of the pieces come and they get assembled in Saudi Arabia. So you have this much longer supply chain here, whereas we're seeing Tesla being a lot more nimble about how it's shipping out its vehicles. So if it's still producing less than expected at this point, as you're also already seeing some of these legacy car makers pulling ahead and ramping up production, Lucid really being caught on the back foot here.
Yeah, I mean, Tesla has larger scales, so not sure if it's not necessarily an apples to apples comparison, but you're certainly right. I mean, there's a lot of competition in the EV space. Lucid has always argued they're competing on the higher end. But as we see consumers sort of rethink where they want to be spending their money, with other car makers having those federal incentives in place, you have to wonder, how uphill that struggle is for Lucid moving forward.
This whole rigmarole looks a little too difficult for Lucid as a company. The cars are absolute stunners, but there is no way this shit is sustainable at this current scale.
Another day, another new development that EVs are not doing so hot right now.
Yeah, our head of news, Miles, was talking about how whether I wrote the same story over again, but this time used GM. Well, in this case, GM now following Ford in the sense that they are actually pushing back production of the EV Silverado and also the Sierra and EV that they're going to make at this plant in Orion, Michigan. They said that they want to, quote, better manage capital investment with aligning with evolving EV demand. That's sort of the big thing. They're evolving EV demand, potentially what Ford is doing when they cut a production shift for the Lightning. They're not seeing that demand there potentially. Maybe they're kind of like cutting supply, rethinking pricing, and maybe sort of changing the strategy. Maybe GM is seeing that as a harbinger of what they might see in the future. They're not going to stop making the truck. They're actually making it right now in a different plant, but they're not going to expand as much as they thought they were going to.
Evolving EV demand. That is one hell of a political term. It's no coincidence that they're not seeing the fervor like you would with the Rivian R1T or the Cybertruck as it's about to launch. Consumers aren't frothing at the mouth to get a hold of one of your vehicles. That alone should tell you something. Ford, GM, they're trying to make lateral moves into the battery electric vehicle space. And I mean, why not? They already have the successful consumer with their regular trucks. All you have to do is get those consumers to buy these new battery electric vehicle trucks. Problem is, them don't want to change. You have to make it irresistible. A simple lateral change just means they have to do more work to enjoy your product. Give your consumers something more outlandishly better when it comes to performance. Functionality. Change up the style of your truck. The R1T, the Cybertruck, they built these vehicles from the ground up. When you start from such a solid base, you're able to then progress forward. The next generation of the Rivian is going to be built off the back of the success of the R1T. Tesla has 3 generations of battery electric vehicles that they can build and expand on when they're creating the Cybertruck. Foundation like that, you just can't acquire overnight. There's no wonder your vehicles are not drumming up the same kind of excitement.
Seems like being careful with where they're investing at a time where they do have the strikes ongoing too, right? Like just as far as GM only has so much money to go around, like all companies only have so much money to go around, and when you have less workers literally working for you and you're trying to think about how to be more efficient, maybe EVs just isn't the space of efficiency for these car companies right now, especially the car companies that have been creating traditional vehicles for so long, right? It's not like they're Tesla and they're cutting back on EV production.
Right.
So they're cutting back on all car production. They're still producing other cars. They're just saying, you know, we got to be a little bit slower with the EV thing. And as Praska said, reminds us of our Yahoo Finance survey, right? Mm-hmm. Where people weren't that willing to move over to EVs. We were all pretty surprised by those numbers.
Yeah, the demand picture, I think, is very interesting. I mean, you're seeing on your screen now, 57% said they're not likely to purchase an EV in our survey, compared to 11% that were unsure and 31% that were likely. And some of the big concerns here revolves around pricing, revolves around infrastructure, driving range, another big factor there. And it makes me wonder if we overestimated how many people would be interested in EVs, and you know, the tax credits we can get with those cars. I think that all is going to factor into it, because right now with interest rates so high, a lot of volatility in the economy right now, spending a ton of money on an EV just doesn't seem top of mind for consumers.
Yeah, 2 big things you guys mentioned. So interest rates, high prices, those are sort of weighing on demand. If you get these cars for cheaper, they'd probably sell better, right? Mm-hmm. But a big thing I think is there's a bifurcation between your Model Ys and smaller EVs and your big pickup trucks. They're more money, huge batteries. They need to be filled up with power probably more frequently, and our charging infrastructure just isn't there yet. So I think there's more concern about that, whereas a Model Y can go 300, 320 miles. You don't have to worry about charging.
So I was going to ask that. I mean, traditionally, like we think of pickup trucks as kind of gas guzzlers, right? Or is it the same for EVs? They take up a lot more battery, and therefore, like range anxiety people, you don't want to get a pickup EV. You'd rather get a Model Y.
I mean, for instance, the Model Y probably has about a battery that's probably half the size of a F-150 extended range battery. Wow. And they probably get around similar range, but the Model Y will get a bit more, right, depending on the situation. So you're basically, your efficiency is half, meaning you got to charge more. It's going to take more. It's going to cost more to fill up the battery. So it might be the fact that just that use case of an EV pickup not going to happen, or not happening right now.
Not happening right now. Cybertruck efficiency will blow everything out of the water.
Tesla is reporting its earnings tomorrow after the close of trading. All eyes will be focused on margins after it reported low delivery numbers and cut prices earlier this year. A lot has changed since the last earnings call, with the UAW walking out on the big 3 automakers here in the U.S., and many saying the strike will benefit Tesla, including Ford's executive chairman.
Toyota, Honda, Tesla, and the others are loving this strike because they know the longer it goes on, the better it is for them.
Let's bring in Dan Ives, Wedbush Managing Director. Hey, Dan, good to see you. You are bullish on
Great
Tesla.
to be here.
You know, we've heard a lot of rhetoric that the strike is going to be good for Tesla. And I guess I'm trying to figure out exactly how that is going to play out and whether we're going to see it in the numbers.
I mean, look, it's good for the long term because the biggest competition was coming from Ford, GM, Stellantis in the U.S.
You'll be able to make plenty of money selling hybrids and internal combustion engines. Back of the napkin math, probably for the next 5 years or so. A hard choice must be made. And it seems like GM and Ford are taking the easy way out. My only message to them, don't be asking for no bailout as we approach the end of the decade.
And that's why it's really been a champagne on ice moment for Tesla relative to this. But clearly, look, they have their own challenges that they're trying to navigate. But the UAW torpedo has really been a disaster for Detroit.
Wait, but so explain this to me, because why, in the long term, why is it so good news for Tesla? I mean, eventually the workers are going to come back. Eventually, I mean, whether it's a week or even a month, and they're going to start churning out cars again that are going to compete with Teslas. So it feels like, isn't it more of a temporary hiccup than anything more profound here?
Julie, come now. Even if there was no UAW strike, Tesla was running laps around the American market. So much so, in fact, that Tesla could halt everything. They could shut down every factory for a couple of years. In GM, Ford, they would still need a telescope to see where Tesla is today. And that's before the strike.
Yeah, Julie, I mean, that's obviously a great point, but I think the bigger thing is what the deal ultimately looks like, what the cost intakes are going to be for GM Ford. Do they have to raise prices $2,000, $3,000, $4,000? That's a huge advantage for them relative to Tesla and others. And I think that's really been the frustration here. Just as Mary and Farley are building this EV transformational strategy, the UAW really comes with a deal that is, you know, what I view as just not feasible, just given the business model.
And the easy answer would be to scale back on your battery electric vehicle plans and make as much money as humanly possible with hybrids and internal combustion engines. I mean, that is your bread and butter. But your margins will slowly erode away as you approach the next decade. And that's what Jim Farley, Mary Barr, they can see the iceberg that is approaching here in a few years. This will become less and less profitable as the years roll on. While they see the imminent iceberg, you have a mutiny on the damn ship. This only ends in disaster.
Tomorrow, what are the key metrics, Dan, you're going to be watching? You know, is it margins? Is it deliveries? And what are you expecting on those bogeys?
Yeah, and Josh, great to see you. Look, from a margin perspective, with these price cuts, they've sacrificed margins for volume. So the big focus is going to be 17% gross margin, the auto gross margin ex credit. That's the line in the sand. And then does Musk formally put a flag up there and say the price cuts are basically done?
You can wait forever. Elon's going to do whatever it takes to get more vehicles on the road, especially when you have major catalysts hinging on miles driven, like full self-driving. I'm not saying that the margins aren't important at all, but when they're industry leading, who gives a shit? More miles driven, more batteries being produced. These are the things that are going to help Tesla cement their future pathway in gold.
Because that's the problem here, is that once you start going down these price cuts, the fear is you just continue to go down that same road in 2024. And it's very important that margins chop out this quarter.
You're right. Elon Musk has not been shy about this. He's playing a volume game, and if it means sacrificing profit margins, so be it. But in your opinion, Dan, you know the company, you followed it for a long time. Do you think the price cuts are over?
We think about 95% of them are over. I mean, there could still be some price cuts down the road, but I think in China, they're going to really have to stop these price cuts, because ultimately then it's a race to zero, right? And I think that's, even though this has been the right poker move to get to this point, I think going forward, they have to sort of hold the line in the sand. Because if they continue to cut prices and margins continue to tread lower, that would probably be what I'd say is probably the biggest bear case, in which clearly a macro that's not roses and rainbows.
Speaking of something else that investors are watching that they're not necessarily hearing what they want to hear on is the Model 3 refresh. You talk about this in your note too as being another area of focus from the call. What do you want to hear from Tesla? What do you think you're going to hear from Tesla on the Model 3 refresh?
It's really about demand. In other words, are you starting to see demand that upticks on the mile through refresh? Price points $10,000, $12,000 higher. That's key, especially in China. When you look at the refresh, and look, China's the hearts and lungs of the Tesla growth story here. I think the other focus to Josh's question is going to be Cybertruck. Do they kind of talk about production, any sort of targets? When does production start? When do deliveries start? And this is what I view as a very important call for Tesla.
On the Cybertruck, Dan, when do you expect that to come rolling off? When do you think that's going to hit? How much do you think they're going to charge for that? What's the price point? And what really do you think demand looks like for the Cybertruck?
Well, I think demand looks super strong. I mean, we'll call it pre-orders. I mean, obviously some of those could churn, but that's going to be upwards of 1 million, right? So I do think there's demand for 500,000-600,000 even off the bat. I think price points 65,000, 70,000. I mean, when you even look at some of those Rivian price points, I think it's going to be in that category. I think production starts by Halloween, early November. Deliveries start this quarter. And then, going into next year, Street wants to see called 40, 50,000, potentially higher. And that's important to the broader Tesla story, to show that you could talk the talk, walk the walk in terms of the production side.
I know it's a what have you done for me lately type situation, but Tesla's been talking the talk, walking the walk for almost 20 years now. And in my experience, it's not a matter of whether or not Tesla will get it done. The timeline just might be a little off. I guess that's what happens when you're doing stuff that no one's ever done before.
Say for me again, Dan, what you think the demand is going to be for the Cybertruck?
Look, I think overall demand is for, when I look at over the next few years, 500,000 to 600,000. In terms of what could be. So this is something on a steady state that could be 6-figure unit per year, but it's all about production. I mean, look at what we've seen with Rivian, right? Production has been the issue, not demand.
And Dan, I'm sure we've talked about it before. I'm not a buyer of the Cybertruck. This is not for me. I'm not living in Mad Max, the Thunderdome. I don't need to drive a car that looks like that. But I do wonder, listen, if the thing ends up being a runaway hit, if people love driving this thing on the roads, does that up the ante on other car makers to get weirder?
Well, it does. And Julie, remember, I mean, if you're driving this, around, no one's taking your parking spot, right? So I think this is going to be a kind of
like that's not something in its favor. That's kind of icky about it, in my opinion. But that's just me.
Totally. No, but look, but no doubt, it's up the game. When you look at Rivian, you look at Cybertruck, it's up the game, and that's why it's been so important for Ford with the F-150 Lightning, for GM and others to go after this category. And when it comes to Tesla, yet again, the skeptics will criticize, and I think yet again they'll continue to outperform.
In conclusion, while Tesla has a volume-based game plan, Lucid, GM, Ford, they seem to be scaling back. Well, to each his own. But all eyes will be turned toward Tesla's Q3 reports today. By all accounts, there shouldn't be anything too surprising to report. I fully expect them to reiterate their guidance of 1.8 million vehicles delivered this year, have a gross automotive margin around that 17% range, and maybe a few nuggets of how Tesla plans to proceed in the future. Either way, it will be informative, and I'll be tuning in quite closely. That's all I have for you today. Be easy. Bird.